14?
Yeah, I was definitely a lot younger than I am now, and how I feel now, I've got to say. Long time ago, mate.
It's hard to believe that any of us could be younger than we are now, Geoff. Look, we're going to have a look at this market. We're going to divide it up and look at it from a few different points. We're going to start off with Ash, then we're going to go to Gordon, and then we're going to go to Geoff. Yeah, just waiting for Gordon to come in. I do hope there's been no problems in the US. Let's start with US. How are we looking at the market today?
Oh, mate, do you know what? There's lots of really, really interesting data at the minute with what's coming from the Cot Data, and the seasonals kind of don't back up everything. So, and I'm not sure whether some of them are a little bit risky, but one thing is screaming, and it was screaming last week, and yet the timing might have been a little bit off. Is the Aussie CAD. You know, the Aussie CAD as a potential short is it was the call last week, and it's going to remain the call this week. The fundamentals have changed a little bit because we did have Jerome Powell out on Friday at Jackson Hole. I don't think he said anything that was that shocking to the market, but the market did react very negatively in the end. And it was just about going after inflation. You know, we know it's the same narrative. They still kind of keep going on about that. That would have suggested that the US dollar would explode to the upside. It did push those highs. And while it's doing that, it's kind of dragging the Canadian dollar with it. So as much down to do with kind of where things are in the neighborhoods, the Canadian dollar looks pretty positive. But look at the Cot Data. I mean, this is the net speculating positions. The highest it's been all year. I don't know if that's really clear on my charts here, but it's the highest it's been all year for net long positions on Cot. This was it last week. So when I was reading it last week, it was starting to build. Not quite as the highest point over here, but it was starting to build. This week, we're actually seeing it push beyond those points and actually getting really bullish. You know, it's at an extreme up here. Now,
sorry, Ash, is that the Cot for the CAD or the US?
This is for the CAD.
For the CAD, yeah.
This is for the CAD. I suppose I just wanted to sort of give a little bit of context about the US and how the US and the Canadian dollar, you know, they kind of work together in some regards. You know, when one goes, the other one tends to have to follow because of geography. So the policy from the Bank of Canada will probably stay in step, closer than anybody else, closer to the Fed than any other central bank potentially. But the Cot Data is certainly suggesting that the Canadian dollar is very, very supported. It's hyper supported right now by the speculators that report on the CFTC. Sorry. Now, if we go over to the Australian Cot Data, not as extreme as it was. You know, certainly at the start of the year, it's very extreme. But I think significant that it is building lower. You know, we are starting to see that the enthusiasm come away from the Australian dollar. Both of them are linked to growth because they both are commodity currencies. But and we're seeing oil as well. You know, if we were to bring up a chart of oil, we're seeing that the confidence in oil come off a little bit. The concerns about recession are there. I think it probably affects the Australian economy more and potentially the Australian dollar. So what we got is a situation where the Australian dollar Cot is telling us that the net shorts are have really got control over the positions in the Cot report, and the Canadian dollar longs have got the control of the positions. So Cot Data points us to an Aussie CAD short. Now, if we then bring up the seasonals, which I'm going to have to share on this.
But before you go to seasonals, do you mind if I ask you, is the momentum here important? So I can see that we've got long-term high for buyers of the CAD, but there's also momentum is growing, and same with the Aussie. Momentum was growing for the shorts. Does that take a part of this for you?
In regards to the Cot Data, you mean?
Yeah.
Yes, it does. Yeah, it does. Yes, it absolutely does. Because actually, you know, I'm not going to talk too much about the stocks, but what is actually very interesting with stocks is that even though they're bearish, momentum seems to be switching. to the other side. So we might well not see, we may not see the collapse in the stock market that I think many people probably would anticipate after what happened on Friday. It may not continue to move down quite as extreme in quite an extreme way, because momentum has shifted actually back to not be quite as weak. It's not strong, but it's not quite as weak. So yeah, I would definitely use momentum. I mean, the fact with the Aussie and the CAD is not only is momentum strong for the CAD, but the trend is also up. So an example in the other direction might be that let's say.
Mate, are these your personal charts?
Yes.
Pretty cool, mate. So
Yeah.
you make these yourself off the data, right?
Yes. Yeah. So yeah, just make them up and you can start analyzing the data in just a bit more detail. This would be an example of how you've got this point here to this point here. The trend is still up. It's still above the zero line. So the trend is still up, but the momentum has shifted, to the downside. I think what's quite telling here is we got up, 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 up. The momentum's up, the trend is up. Same with the Aussie. The momentum's coming down and the trend is down. So this would be a relatively strong signal for us. So we are looking for the shorts. Now, if you bring up, we'll look at the seasonals in a moment, but look at this as well on the signals here. What happened right at the end of last week? This huge selling bar. And okay, you've got patterns over patterns. I'm sure people see an inverted head and shoulders. They see a head and shoulders. So there is a little bit of confusion in the charts down here. But Friday's bar, I mean, the fact that we were relatively stable for most of the week would suggest that the call last week was wrong. But we do have to bring in the fact that Jackson Hole was a premium event of the week. And it might have just been that the timing was a little bit out last week, trying to get ahead of that Jackson Hole. Maybe the idea should have been to wait for Jackson Hole and then start to look for positions on the short side for Aussie CAD, because now the chart is suggesting that could happen. It's not definite, but the overall market move here is still down. It hasn't really broken to the upside. A little bit of consolidation down here. Very weak bar on Friday after the premium announcement. Then you've got the Cot Data suggesting that you've got an Aussie CAD short. It is starting to build, in my opinion, for that particular signal to be something that we should look for. Look for some sell signals.
Mate, can I just join in here because,
yeah.
Sorry, this is going to be the only thing I've got on my watch list, seriously, this week, and it's not going to be the way you're thinking. It's going to be in completely the opposite direction. And if I can point you to that weak candle as a result of the symposium, if you like, or what Powell said out of the symposium, doesn't that kind of give you the impression, that one, doesn't it kind of give you the impression that if what Powell said was strong enough, it would have driven it back through that candle and down? And therefore, if there's a rally above the high of that bar, isn't that, if you like, the longer, the stronger inverted head and shoulders going to take over? I think there's a case for both, isn't it?
Yeah, undoubtedly, mate. I mean, there always is, isn't there? There's always a case for both, and it'd be interesting to talk on Monday about this stuff, because you will bring in a different opinion on the technicals, and when it comes down to it, I brought the chart up just to sort of show that there's some interest here on the price action, but actually it is about the Cot Data. I wouldn't get too tied up in the charts as yet. So I'll be looking for short positions, but purely because the Cot Data would suggest that that's what I should do. But you're absolutely right. Things could turn around, and maybe the technicals aren't suggesting that that's what we've got. But when I look at this, I think that there's a case to be made for it. I guess that's the main point here.
Put your boxing gloves on for tomorrow, mate. We'll have a good chat about it.
Yeah. Well, these are the seasonals as well. So this is the seasonal picture. And what's quite interesting about what you're saying, in some respects, and what might end up happening is that we might both end up being right because of timing. It might well go long for a period. There is actually a neckline. We won't go back to the chart now, but there's a neckline that suggests that we could get a little bit higher in Aussie CAD before we collapse. So the timing is going to be key. But until that Cot data changes, I will still be looking for short positions. The seasonal suggests that September is lower with a rally around about midway through. So, we do have to sort of take all these bits and pieces into account. It's not just kind of like, Aussie CAD shorts, let's just, sell everything that suggests that we should go short. Because, as I say, the timing aspect might come into play. But the bias, which is what this is about, is really for looking for downside rather than upside.
Cheers, Ash. Any more on that?
No, mate, no. I mean, I could actually talk about it for quite a while, because there are sort of other things that are other dynamics that should be taken into account. Like what's happening with the price of oil, like what's happening with a potential recession, and the fact that the demand for oil might come out of it, like the fact that the Canadian government have just managed to do a deal, or they are doing a deal with the European Union to supply their oil. There's lots of things that we could literally sort of like disappear down a spider's web if we want to really get into a deep discussion. Mate,
key message here for our people, right? We're looking for Aussie CAD short, and if you're a wave rider trader and you get a chance to get Aussie pairs long or CAD Aussie pairs short or CAD pairs long, that's not a bad place to be this week. And again, get your timing right, get your price pattern right, make sure you get a valid entry. Don't go just smashing into stuff. But if you're a wave rider trader, if you can get Aussie CAD short, fantastic. But if you can get Aussie pairs short or CAD long, not a bad place to be either, right?
I would suggest so. I mean, obviously, so, if we're talking about pairs, then we do have to bring in the other currencies like the euro and the yen. Interestingly, the yen has not shown decent Cot data this week after the concern of what happened, of what's been happening in the market. Swissy, different picture. People seem quite keen on the Swissy, but they're not that keen on the yen. So this is where the dynamic is fascinating right now, and where I would actually probably edge towards splitting it genuinely, with the Aussie CAD. I would just say that particular pair is showing some genuine signals. The others you'd have to do a little bit more delving into to get a bit more detail of what's good and what's not. I'm not sure whether I'd go out and out Aussie short and CAD long, but certainly Aussie CAD as a pair, I'd be looking for short.
Cheers, mate. Okay, that's it from you.
That's it from me. Yep.
Mate, I love the data. It's always interesting to have a look. And what I really like is what we are going to get here. We're going to get a data-driven view, and we're going to get a technical-driven view. And they may not be the same, but as traders, understanding both is really cool. It's a really important way to learn to trade. And getting some balance around this really does help. Dollar yen long, you like it or not?
Dollar yen long, I would edge towards it. But if I mean, let's have a quick look at the Cot data and see what that's telling us about the dollar yen, because as I say, the yen wasn't quite as bullish as I thought it would be, and it has been building. Look at the way that the yen's been building throughout August, but it's just started to come off a little bit. So that would suggest that maybe some weakness could start stepping in. Not particularly weak, to be fair, and that would suggest that maybe dollar yen long may not be a particularly safe trade. But you would probably still edge towards it. When we look at the dollar, actually some interest coming out of the dollar as well, and it has been interesting what's been going on with the dynamic with the dollar, because we know what the Fed's position has been, and it's almost like the market needed confirmation from Jerome Powell's lips this week, even though we all that's what he's been saying, that's what the Fed have been saying for quite a few months. So if you tied a hand behind my back and said which one we going for dollar yen long, then I'd say yes. But then I'd also say there's probably easier pairs to trade this week.
Mate, something has gone wrong with my computer. Can you guys hear me?
Yeah, we hear you fine.
Okay. Mate, thank you very much for that. I can't see anything, so I am going to now... Gordon isn't in that I'm aware of. We're going to go straight through to... I'm back. That's good. We're going to go straight through to Geoff and have a chat with Geoff. Geoff, technically, how do you see things this week?
Yeah, look, like scrambled eggs, mate, to be honest. I think the currency pairs are just ridiculous. There's no direction that I can see that's going to get me absolutely interested for the next 2 or 3 days. I think they're just an absolute garbage junk mess. And like I said to you before, the only thing I had on my watch list was Aussie CAD. And of course, I'm in the opposite direction from a technical perspective than what the Cot Data is saying. And that's fine, as you said before, both could be right. I'll share screen and show you what I am looking at, however. I'm more interested, frankly, in the indices than I am in currencies, but we'll have a little chat about that too as we go through. The screen I want to show is, or first up, is the dollar index. And you know what I think about the dollar, and sometime in the near future, well, the future, it's going to be worth Jack SH1T, but currently it's obviously on a tear. The interesting part about that tear is that it's come to a level that it hasn't been to since the turn of the century. And that is this one here, which is about 109, whatever it is, 109.50. But it's really shot through the most recent highs that go back to, 2014-15, which is, of course, post-global economic crisis, et cetera, et cetera, et cetera. So, and pandemic, all the rest of it, look at that, it's just straight up. It's like a skyrocket. And anything that goes up like a skyrocket, in my humble opinion, has to stop at some stage. And I figured that's a monthly chart. I figured this was a fairly decent place for the dollar to actually have a bit of a rest. It could well be that we've hit a double top here at around about the 109, whatever it is, level, 109.30 or something. And we've started to peel off that. But as we know, the result of Friday was a very, very strong reaction. Okay, it was a guttural gyration, as I call it. And it'll be very, very interesting to see what happens in the week ahead, to see if that guttural gyration turns into a considered opinion of the market. And if it goes through here, which I sincerely doubt, but if it does go through this level, whoa, what happens next? Very, very different scenario. And that's why I'm going back to the indices, and I'll get there in a sec. Gold, S&P 500, all of those things that, well, everything's going to be considered around what happens here, in my humble opinion. If this goes through this level, we're going to see a whole momentum change. Well, it won't actually be based on the trend that we've seen, but we're going to see a whole different thought process, in my humble opinion, because this is a very, very, as I said, turn of the century, strong high. If it goes through here, I think the whole market's going to go, holy dooly, why? Why is this actually happening? Why is the dollar so strong when we've got things like India, China, all of these countries thinking, okay, we don't want the dollar anymore as a reserve currency. Why is it so strong? And there'll be reasons for that, of course. But if it's no longer a reserve currency, then it disappears. Anyway, I'm not the person to talk about that. This is a technical situation right now. And all I see right here is a double top. And if this double top is confirmed by a low high, then buy US dollar. So we're down into the 90s, by my reckoning, in the not too distant future. Okay, it'll take a little bit of a time, but ultimately we're back down to here, because if symmetry plays any part of this, which I believe ultimately in, when I look for a reversal, I'm looking for a full reversal, so a cycle change. It'll come to here and it'll go back to here and it'll come back to here and it'll go back to here, but eventually it'll get down to 94 cents or whatever the case may be, around here somewhere. So that's what I'm focused on. What that does for things like the euro, the pound, is a very, very different story, because they're very, very weak at the moment. But if you look at things like the CAD and the Aussie, and to some degree the Kiwi is weak, you can tell me why that is at the moment. if you like. But Aussie CAD at the end of the day versus the dollar, I think are fantastic conveyances to have. And that's why Aussie CAD for me is very, very interesting, because it's not related to the US dollar. They're both risk on currencies, and one's related more to oil than the other. And that's why oil comes into play here. And if oil can't get through this level, which is 96.40, and I'll go a little bit stronger than that, this looks to be on a down cycle to me, and it's hit resistance again. So oil will play a big part in what the Canadian dollar does, in my humble opinion, and it won't be as effective against the Aussie. Therefore, I think this break of the weekly pivot last week, and let's get back to technicals, and the retest of that gives me the opportunity to say, if I'm right in terms of a directional bias, then a buy here makes perfect sense. Sellers have come in. If they fail, if they're right, they'll continue to sell here and I won't be taken into that trade. But if they're absolutely not right, and as I said to Ash, this looks to me like a failed re-entry into that candle, which was extremely bullish engulfing candle at a strong level. It's come off the monthly pivot, it's come off the daily pivot, it's come off the weekly pivot. This retest to me is absolutely crucial. And if price comes back to here, it's going. It's not staying anywhere near here. It's a big break of that level. So I think that, to me, for Aussie CAD, that's a strong level that we've come off. Looks like a false break to me. So to my mind, if this goes back above this level, it's going back to here. So that's where the Aussie CAD bit comes from. Let's go back to one other thing. And when I start my analysis of the week, it begins with looking through every single currency pair and seeing if there's something that I call a game changer bar, which is a key reversal bar. At the end of the day, the only one, which is extremely unusual, the only one that came up was Euro Pound. And for the second week in a row, I think it is, we've got a game changer bar to the upside. Maybe it's the third week. Game changer bar to the upside here, game changer bar to the upside here, and now we've got an inside bar. That's called a game changer plus in my language, which means that this directional candle, which is a key reversal bar, has been answered by an inside bar. That inside bar is telling me that this one hasn't been disproven, and therefore entry there or even there makes sense to me, trading it long. Do I want to trade that right now? Pound versus, or euro versus the pound, they're both, it's like a race to the bottom, frankly, at the end of the day. But clearly we've had one break, two breaks, both misproven. This one's closed again above the monthly pivot. I think that's reasonable to, I wouldn't say assume, but consider a long at that point. Am I going to trade it as a result of that reversal bar? The answer is no. But if I saw something that agrees with that on a smaller time frame during the week, then absolutely, it's giving me a directional bias. So if I see something that agrees with going long here, then I would. At the moment, there's nothing there to trade. And I think over all the currencies, as I said before, I think they're an absolute mess right now. They're either failing to break out, they're either in the middle of nowhere. They're all the Aussie pairs, even the CAD pairs, which I believe in strongly. I think the CAD's a wonderful, wonderful currency. I think it's the best on the board. And if you can get hold of it, happy days, do so against just about anything else, in particular the CAD, the euro, the weakest currencies that you can find. It draws me back, as I said from the outset, to these things. And in Trading Buddies during the week, we were absolutely desperate for a pullback on things like the Aussie 200, every single indice that we came across. All we were looking for was a pullback to something that made sense. Unfortunately, what happened was we had to wait for the Powell speech, if you like. And what happened was just an absolute mess. Even if you got into a short, which I did, and I chose gold to do this, the whipsaw effect of Powell's speech meant that you had to have an extremely wide stop loss to keep you into the trade. I'll take you to that gold position that I took on Thursday, which was shorting gold. Why can't I see it? That should be an entry here somewhere. Underneath this, oh, there it is, underneath this bar. And I wake up on Saturday morning and I thought, oh, this is good. This is handy. Unfortunately, what I'd done before I went to bed was, because I saw on the smaller time frames 2 great bars that took me in. It must have been on the hourly. It was Friday night after all. Yes, here. So I saw entry here and follow on. Okay, I'm going to put my stops to entry so I can go to bed and have a nice sleep. Unfortunately, the whipsaw took me out. Otherwise, that was exactly what we've been looking for in trading buddies throughout the week. Great technical scenario there, and I think that's where I'd rather be, quite frankly, right now in the indices. Silver's the same, S&P 500's the same, but you couldn't get into those trades and put your stop loss in a great place because of that whipsaw. It was just too hard to do. End of day, what do I see? From a technical perspective, everything that we were looking at last week in trading buddies seems to be happening. The problem is now we've got bars that are way too big. We need to see pullbacks on that. And then I think the directional bias is absolutely on point. Mate, currencies, seriously, I can't see anything that I like outside of Aussie CAD. And if Aussie CAD can get through that high, as I said, it looks fantastic to me for a long. And I know, as we've just discussed, that there's an absolute opposite, maybe equal even, perspective to take. But to me, this level here is so strong. We've got back above it. We've retested it. Entry there makes sense.
Right, Geoff and Ash, thank you very much for that. Thank you very much for coming in, and to everyone in the room who's here to watch today. Thanks for joining us. Do apologise for the fact that Gordon Scott hasn't been in. It's very out of character for Gordon. He confirmed a few hours ago, but he hasn't arrived. So we will put him off. Hopefully we'll get him back in the next couple of weeks. I know he is dolly and long, so I'm interested there. I would like to have heard from him why. And that is in response to the speech on Friday at Jackson Hole. More details, I'm afraid I can't share. That's what he told me when we spoke a few hours ago. Do apologise for not being here. Very grateful to Ash and Geoff for being here, and to all of you guys for listening. We will move this over to YouTube. If you want to watch recordings later on, you'll be able to see this on YouTube in about an hour or so. If you're in the Mars Capital Inquiry Group, you need to jump into a meeting with me in 3 minutes or 33 minutes, depending on which one. Please check your email. In the meantime, everyone, nice to see you. Have a great Sunday evening. Take care. Do your planning. Stay calm. Plan out your week and then follow your plan for the week. That's what good traders do. Thanks, Ash. Thanks, Geoff. See you guys.